An email from Chris in Nanaimo, BC on WSP Global. What's your opinion on the industrial space and this stock in particular?
So WSP Global is an engineering company that is involved in building out projects in public-private transportation and infrastructure, all kinds of commercial buildings, residential work. They do all kinds of different engineering work. What's interesting about WSP is that they have, different than virtually all their competitors, very little exposure to oil and gas. And we think oil and gas is going to be weak for a long time. So I think it's something like 5% of their revenues. They have very strong presence through their MMM acquisition in Ontario to Ontario, and there's a lot of big infrastructure projects to come. Canada represents only 20% of their revenue, and we think Canada is likely to be weaker than the US. US is a big market for them. So within this engineering space, this is the one that I would take a look at. We don't actually own it currently, but it's a great company in a space that has been out of favor.
On to Dan, who's in Edmonton. Hi there, Dan. Hi, Dan, go ahead. In Edmonton. Apple.
Apple. Well, this is one that everybody wants to know about. Historically, not a great time to buy Apple right around a new product introduction. It usually runs up a little bit into the new product introduction. Seemingly, the numbers coming out of this last weekend on the new iPhone are very, very good. Hard to compare the 13 million units in this introduction to the last introduction because this includes China as well. It's possible, it could be sloppy a little bit here. Technically, the stock is not set up perfectly. Great company. It's inexpensive. It's about 9 times earnings, a mountain of cash it's sitting on. So there's not tons of downside, but in the near term, might be other names to look at first.
But you're in this, right?
We don't currently.
No, not now?
No, don't currently.
When was the last time you held it?
We had to come out of it over the course of the sell-off in August.
Okay. Pat is in Halifax. Hi, Pat.
Taking my call. My question is about U.S. banks, large cap banks. With the U.S. poised to raise interest rates probably by the end of the year or early next year, would not be a good time to start picking away at them? And would you suggest a basket or perhaps individuals like Wells Fargo? I'll hang up and listen to your response. Thank you.
Great. So, Pat, financials would be the second biggest weighting in our portfolios. Largely, it's U.S. financials. That includes banks, regional banks, some insurance companies, and some financial technology companies like Visa and Fiserv and so on. I think that you could take a look at the large U.S. banks, both Wells Fargo and JP Morgan. They've both pulled back into sort of the bases they were in all through last year. More interesting maybe to look at the regional banks, and you could do that with individual names, or you could buy the ETF, KRE, which is invested in a basket of ETF, of regional banks. That is the biggest proxy on the U.S. domestic economy. And so rising rates are good for the banks. We don't think they're going up a bunch, but they should make a little bit more money over the next year in their net interest margins, and they should benefit from a slowly improving U.S. domestic economy.
And there is KRE slowly recovering from that recent market swoon. Just quickly before a break here, on that day, August 24th or 5th, when things were so terrible, first thing Monday morning, did you manage to buy anything, get in at those ridiculous prices at some of those stocks?
Interestingly, for instance, in the ETFs, a lot of the prices that were posted on the market open, actually, they weren't even trading there. A few shares might have traded. We aren't big buyers of dips. We like to see divergences. What I will point out is that the KRE is trading nowhere near the lows of August the 24th, despite the fact that the S&P is. So this is a positive divergence, and if you look at the percentage of stocks in that basket that are performing well, the number's quite good. So it's a sector I think you should take a look at.
All right, David, a short break here. We'll come back with past picks. They're all U.S. stocks, one winner and 2 that have actually held up pretty well. Find out what they are after this break.